stocks this week. The Sensex continues its losing streak. It's down 153 points on Friday. What should you do with your stocks now? The government eases norms for FDI in retail. Is this good news for your retail stocks? And the telecom sector is in focus this week with Bharti, Arcom and Idea announcing their earnings. Welcome to All About Stocks. I'm glad you tuned in this week. It's been a difficult time for those of us who invest in our stock markets. This is a show meant for long-term retail investors, and I know it's going to be a confusing time for retail investors for a while. So over the next half hour, we're going to tell you how you should modify your portfolios and still make money in the long term, because we believe it's still possible. This week, we're going to take a very close look at the telecom sector to find out which are the best stocks for you. We'll also take a look at all of the announcements we've heard from the government this week and find out if they're actually going to impact your stocks and if they should cause you to make any changes. We'll answer your questions and, of course, plan out some portfolios. Remember, there's an email ID at the bottom of your screen. You can send in any question you have about your money. Well, first I'm going to bring in my colleague Ajay, who will give us an update on how the markets did this week and some specific announcements we heard from the government. Ajay.
It was another punishing week for the Indian markets. Between Sensex and Nifty, we are down 3 to 3.5% this week. We are also witnessing that till Friday, it was the 8th straight session of weakness in Indian markets. Bank Nifty has been particularly weak. It has been underperforming the broader markets, down around 4.7% this week. A couple of pressure points coming in on the Bank Nifty, and one can say without doubt that is the area which is pulling the markets lower. There are concerns in the real economy that interest rates may actually harden because of the RBI measures taken to curb volatility into the rupee. We have seen Yes Bank and Axis Bank already hike interest rates on their base rates. Also, NPA fears are consistently weighing in as far as the banking sector is concerned, and that is a big pressure area for the markets. Of course, till now only private agencies have been doing it, but now even Reserve Bank of India has trimmed FY14 GDP growth target, which has really gone down and upset the sentiment on the street. A big global brokerage, Goldman Sachs, came and downgraded the Indian equities this week. They have a sell call on the Nifty, saying that India's growth worries as well as dependence on foreign outflows will continue to be a big worry area. So net, things are looking very weak for the Indian market. We have come down to 4,700 on the Nifty futures, and traders are positioning themselves for much lower trade. Even the big bank policy measures, for example, the relaxation of FDI norms in several key sectors like telecom and retail, were not really taken in good light by the market, and there was hardly any reaction on the street regarding that. Traders are expecting 5,500 levels to be tested on the downside in the near term.
All right, Ajay, thank you so much for that update. Joining us now in the studio is Sharmila Joshi, the Head of Equities at Peerless Securities. Sharmila, thank you so much for joining us. It's becoming a really difficult market for retail investors to hang on in, because not only is our stock market doing badly, gold is doing badly, debt funds are doing badly. It just seems like all asset classes are abandoning us. It does seem like a good time right now to just pull your money out and put it in a fixed deposit, because the rates there are still high, and as of this week they've been corrected upwards a little further. Tell us why you believe that we should still remain optimistic, if you do still believe that we should remain optimistic about equity and we should still hold on to our long-term portfolios.
It's a very, very difficult time for investors, whether retail or otherwise. But I think that at the end of the day, if you want to make a return which beats inflation, then equity, history has shown that equity is the place to be. So I think that what will happen is that people will run out of patience. But that's the danger that you have to watch, that, you shouldn't run out of patience. And you should try and buy quality stocks and stay with them, and probably lengthen your investment horizon. Having said that, I would say that, if you bought a stock and it made you 10-15% return, then book the profit, because we've seen that stocks are also moving in a band. But if you bought a good stock, buy it with a view that, okay, I'm going to stay put in the stock for some time to come.
All right. Like Ajay was just telling us, not only has the market been moving downwards in a continuous manner, there's been other bad news. We've been downgraded as a country. There's a lot of mixed messages coming from the government. Some voices from the government are talking about growth. Some voices from the government are talking about tightening the market and maybe holding on to liquidity, propping up the rupee. The market, incidentally, is not reacting to any of this. It hasn't really reacted to corporate numbers as well. Where do you expect the next trigger to come from? How much longer do we expect this downward spiral to continue?
Actually, in a way, market has reacted. It's just that, we are looking at the headline number of a Sensex or a Nifty, and, we are getting carried away by that. But if you actually look at stock prices, then, that tells the real story. Because barring one or two sectors, and even within those one or two sectors, the two or three really frontline stocks, every stock that you can pick has done so badly in this last 2-3 months that it's telling the story. Also, if you're looking at it from a PE, EPS perspective, then it again back to trading at 14.5 or thereabouts. And, so you think that, Nifty is at 5,800, but it doesn't mean anything. It's just a number because you're still trading at a multiple which is discounting future earnings by 14 or 14.5 times. And, that's the band that Sensex has been, 14.5 to 18 or so. So, you're again at the lower end of the band. So let's not get carried away by that number, but you should really look at it from an individual stock perspective. And I would say that really I think markets are reflecting a lot of the pain that is happening in the system, whether it is banking as a sector, whether it is the mid caps, whether it is, so many individual stocks have taken such a beating that I think it's kind of reflecting a lot of this bad news.
Well, I want to ask you specifically about mid caps, but when we design portfolios, when you give advice about designing portfolios, there's always talk about putting one or two mid caps in every portfolio. Right now, irrespective of the stock selection, almost all mid cap stocks are taking a beating over the several weeks that have gone by. What do we do with our mid cap stocks right now? Does it make sense to just sell out of them and only hold on to the frontline stocks, the big names? Should we still have faith in our mid cap there?
I think I agree with you completely. I think it makes a lot of sense to do a shift and get into frontline stocks increasingly as time goes by because because I think that the uncertainty for a lot of mid caps will increase, and sometimes things happen which we are not even aware of, which we kind of like hit us in a retrospect. So you don't want to be caught in one of these companies on that. And secondly, I think frontline valuations have become so attractive. A lot of the valuations in frontline stocks have become so attractive that we should use this time to really get into those. So I think as a strategy it can work. I think where you're making minimal losses or where for a sure that the story has gone really, really bad, it might be a good idea to shift out of it completely and get into a frontline stock.
Within the banking sector, in the past, you and I have talked about the fact that you see a lot of value within the private sector banks. Do you still see value in banks like Axis, which have corrected so drastically? Do you still think it makes sense to pick up those stocks?
Yes and no. I mean, the value is there, but possibly you'll have to wait a bit because I don't think that this correction is done. Simply because, banking is an overowned sector. So everybody has some or the other banking stock within their portfolio. So, if you were to see something going wrong, then the reflection on banking will always be first. And we are seeing that reflection. I mean, if you look at banking index and where it is at, as you were saying, it kind of brings that to mind. But I think that it's a matter of time really, that some of these measures, banking stocks have also reacted to all these RBI measures, etc. And they're finding it very difficult. I mean, having spoken to bankers, I know that they're really going through a very difficult time, dealing with all these new strict measures. So it's, they expect, that some relief will come, if not now, maybe a month down the line, that some relief will come. And this quarter will definitely be a write-off as far as banking stocks is concerned. So maybe we should wait it out for 2-3 months. And once we see or we sense that, okay, the rupee volatility has kind of gone or it's become stable and that the government is looking to roll back some of these measures. And maybe that's the time when we should start entering some of these private banking stocks.
I want to take you back to when you said, get out of your mid-caps and consider frontline stocks. And you said you still see value right now in one or two frontline stocks. Can you give our viewers two stocks you see value in right now?
I think pharma as a space will continue to do well. So I think within the pharma space, whether you were to look at a Sun Pharma or even a Dr. Reddy, I think definitely you could look at some pharma space. I think FMCG again would have some value because at the end of the day, you'll want to be in something that is not so high in beta and where earnings are kind of fixed. And at the end of the day, the third sector that comes to mind is the sector which is perhaps the only sector that's giving you double-digit returns at this point in time, and that's IT. So, whether it's sales or whether, if you're looking at it on a yearly perspective, that's where you're really making double digits.
Give us one name within the FMCG and one name within the IT sector.
I think we should wait for correction, this correction in HUL that is underway to get over. And I think if you get it at a level of between 550 to 570, I think it's a good stock to enter. And within the IT space, I think again on correction, HCL Tech is a good stock to enter.
Alright, so those interesting names there that Sharmila still believes that there is value in our market, and of course she said in the long term, if you're a long-term investor like you and I are, then it does make sense to still have a portion of your portfolio in equity. We have a couple of questions for you, Sharmila. Ravi has written in, 300 shares of Future Retail at 218 rupees. Should he hold on to that stock? Stock at the week at 78 rupees. Now, we know that, like we were talking about, lots of announcements coming in from the government in the hope of propping up the market and the rupee, bringing dollars back into India. They seem like band-aids. The market is not really reacting to them. Even the announcement of the fact that, the rules for FDI in multi-brand retail were eased on Thursday evening. We didn't see too much happen in the market on Friday. For an investor in Future Retail, do you think this will make any difference, any change for them?
It should, because I think that what's happened is that, when you first said that FDI is relaxed or whatever, you said 30% mandatory local sourcing or whatever. And I think that really applies more to companies which are in food multi-brand retail. So that became a little confusing, because if I'm like a furniture person and I want to come into India, I may not be able to source 30% locally. So then what do I do? Then that means I can't come into India. So I think a lot of these questions will now for people wanting to invest into India will get answered, and maybe now they could look at India as an investor, as an a place where they could invest. Yes, I think this news is positive for Future Retail, because I think definitely they would want to look at opportunities, but it's going to take time. So I think that we'll have to give it at least a couple of quarters to see what the company comes up with. And they are leveraged, so they would be looking to lower their leverage by doing such deals. So we'll have to give them some time to see what they really come out with. What I believe is that immediately probably Trent could benefit more, because they already have an agreement in place, so they could probably take it forward faster. But I'm sure Future Retail will also benefit, but you need to give it some time.
So you're asking him then to hold on to Future Retail?
Yeah, I think so, because at this price it doesn't really make sense to exit it, especially when this clarity has come.
We're going to take a very quick break. On the other side, we'll review Sharmila's own portfolio. We'll also discuss the telecom sector. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Sharmila Joshi is with us as well in the studio, helping us with our stock investments. We have a couple of questions that have come in on the telecom sector. Golam has written in 25 shares of Bharti Airtel bought at 325 rupees. He wants to know if he should hold on to it. Now, the earnings beat expectations. We also know it's one of Sharmila's recommendations with a target of 350. I want to bring in Ajay first to take us through the earnings in the telecom sector, and also the fact that we've seen some of that pricing power return. Ajay, take us through what happened this week.
Well, Faye, the earnings season is definitely in its last lap, and several key earnings were declared this week as well. But one sector to note this time around has been the telecom sector, and especially the serious players such as Bharti and Idea have thrown up pretty interesting trends in the first quarter. We are witnessing strong internals by both these companies this week. Of course, there was some stock reaction as well. Brokerages have come out and upgraded their earning estimates as well as price targets. But management commentary is indicating that pricing power after several quarters is coming back to this particular sector. This is clearly evident in increasing volumes and revenues per user. Also, apart from Reliance Communication, which is a big worry area because of high debt which is sitting on its books, Bharti and Idea is where the big funds till now have been relatively neutral or underweight, and hence they also have started gradually increasing the exposure to this sector after a lot of other players have surrendered their spectrum or left the sector, and now only 2 to 3 players, including Vodafone, Bharti and Idea, are being seen as serious contenders for market share.
All right, Ajay, thank you for those numbers. Are you, since you gave us a target of 350 on Bharti, are you impressed with the way the sector has done in terms of numbers? And can you tell us what happened to Arcom and why Arcom corrected so drastically this week?
See, I think for Bharti, it was an excellent set of numbers. So I think definitely the investors should stay put over there. The winner, of course, has been Idea, which has turned in a very good set of numbers. But you saw some correction there also because we had seen the stock run up in kind of anticipation. And I think the reverse has happened in the case of Arcom because you didn't see, you saw numbers lower than what market was expecting. Last time, of course, there was some one-off which was not there. But I think even if you remove that, the numbers weren't quite what they should have been. And this is a stock that's run up from 60, so it's doubled. So, there is some amount of correction is warranted. So I think that's about it. I think for Arcom, it's really going to be the story of what they're able to do with, the process that they've started with their tower and, whether they're able to get investors in and at what price, etc. So that's really going to be the story for Arcom. It's not really going to be so much number specific in any case, but the numbers were a disappointment.
So going forward, are you bullish on Airtel and Idea at this point?
Yes, I think, but Bharti Airtel would have to correct from this level to really buy it, and even Idea for that matter. Though Idea numbers were really very good, but I would wait for the stocks to correct a little bit before I bought into them.
But we have another question that's come in from Vijay Haran. He has 20 shares of Financial Tech, bought at 907 rupees. He wants to know if he should hold on to it. I'm going to pull up that stock. It ended the week at 147. Now, Financial Technologies was under a lot of pressure this week. It fell as low as 105 in trade. This is because its subsidiary, NSEL, suspended trading of agriculture-related contracts and, of course, deferred a lot of settlements. This caused a lot of fear in the market about possible payment defaults. Now, for someone like him who's holding Financial Tech at 900 rupees, what should he do?
It's very difficult, to take a call simply because what happened is really a technical situation where you saw some amount of concern, as you're saying, come because that you thought that there could be a payment default. Now, whoever we heard, whether it's the officials from Financial Technologies or FMC, they've all said that this is a situation that's going to resolve within the next 8 to 15 days. That being said, I mean, you could see a very sharp pullback if that does happen because, obviously, this is a stock that everybody went short on. I mean, given this kind of news, you knew that this was headed downwards and you went short on it. So you could see a pullback because you could see some amount of those shorts getting covered. But for it to move to 907, that's the investor's price. That's another thing altogether because, it would mean that, what would be therefore the products that NSEL would give you because it had two products. One was this e-contract on gold and the other was the agricultural contract. If that's out of the picture, then what does NSEL give you? Is it able to sort the regulatory issues on that? Because it was a good product, but obviously there are regulatory issues. And then there's the whole confidence thing, to build that back in the minds of investors. It's a very, very long and difficult road for Financial Technologies. He should stay put for the next 8 to 15 days to see how this situation resolves. But 907, according to me, is a really long call.
And there's also the question of MCX. Now, if you pull up the MCX stock, it saw a very sharp cut. It was down about 20%. It ended the week at 408 rupees. What's your call on MCX?
I think the same. I think you need to possibly wait it out and see how this situation on Financial Technology resolves. But that being said, it's less troublesome for MCX because it's a separate exchange by itself, and it is there are no regulatory issues there. So hopefully it should recover faster from this level. But there again, I think it's going to take time for it to go back to that 1,000-1,100 level, which a lot of investors had got in at. So every time it goes closer to that level, you're going to see pressure on the stock. So if you bought at this level, you can possibly wait, and if you haven't got the stock, wait to buy it. You're getting a good price on it. But it's a slightly risky buy. But if you own it already, then I think, again, the road is going to be a little difficult.
For those of you who watch this show regularly, Sharmila designed a portfolio on the 21st of December last year for us, especially for this show. The idea is to use this portfolio to understand the fundamentals of building a portfolio for a long-term investor. Now, the portfolio is in an overall loss of 23%. Let's compare that to the Nifty that's down about 3% on that same level, which means that it is underperforming the Nifty very drastically. But like we talked about, the Nifty is possibly being propped up by some very strong stocks at this point. Let me go through the list of stocks. There's SAIL, BHEL, Central Bank, Godrej Industries, RNFS Transport, Ipca Labs, JSPL, Kajaria Ceramic, M&M, and SBI. Now, like we talked about in the past, SAIL and BHEL are doing really badly. SAIL is down 56% since you bought it. you want to make any changes to this portfolio?
Yeah, I think so, not because of really of any reason of, loss of kind of faith in the stocks that I have, but simply because, I think that all stocks have corrected and maybe it might be a good idea to shift into some other stocks where I think that either the pullback could be faster or that, they could gain more from this level. So I think from that point of view, since I have two metal plays and metals is a space that's doing badly, I'd look to exit one and I'd look to exit SAIL and possibly add State Bank, add that money into State Bank, simply because I think, banks have also been beaten down very badly in this interim. And I think there are greater chances of State Bank doing better in the longer run than SAIL, I mean, in a shorter term rather than SAIL, because SAIL is going to take time to recover 50%, and I think it's more probable that you'll see a better recovery in State Bank. So I think that's one change that I would make. Then I think as you said, BHEL is the other trouble spot for me. So I think I'll switch that and I'll buy Larsen instead, because, what we've seen is that Larsen numbers again weren't particularly good, but their order book is really good, and they've kind of said that they'll meet their FY14 guidance. So from the same space, like it's from the capital goods space, but simply because it has less exposure to power and because it has a better order book, I think the chances of it's a better place than BHEL. So I think that would be the next change.
Alright, so a couple of changes in Sharmila's portfolio. I'm going to very quickly take you through it. Right on top now is L&T, Central Bank, Godrej Industries, RNFS Transport, IPCA Labs, JSPL, Kajaria Ceramic, M&M and SBI. We of course have now on this portfolio increased our exposure to SBI. If you have any questions about that portfolio for Sharmila in particular, write to us. Email ID is at the bottom of your screen. On the other side of this break, we're going to talk about Voltas, NMDC and Aditya Birla Nuvo. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us in this difficult market. Sharmila Joshi is still with us in the studio. Sharmila, it's time to pull up your report card from the last time you were here. You recommended Voltas in January last year when it was trading at 76 rupees with a target of 150 for 1 year. That stock is currently at 74 rupees. It has obviously missed its target. For those of our viewers who took your advice then and picked up Voltas, what should they do?
I exited because, fortunately we are not losing too much money. And again, I think similarly as I said that it might be more difficult for Voltas to kind of put in good numbers in an environment where, the top companies of the country are finding it difficult to meet their guidance. So I think exit it, and possibly if you bought it, then again, as I said, switch to Larsen at this level rather than being put in Voltas.
Alright, we have time to look at one more portfolio. Harminder has written in and he sent us the portfolio. We're going to take this as a rapid fire round. He wants to know which of these he should hold on to. He's a long-term investor. 30 shares of Cadila bought at 890. Hold or sell?
Hold.
50 shares of NMDC bought at 164 rupees. What's your call on NMDC?
I think it's a hold at this level because valuations are very attractive.
He also has Aditya Birla Nuvo, 1125. He's not losing money there right now. What's your call on Aditya Birla Nuvo? You're expecting strong numbers?
This is a stock actually that I quite like. So I would stay put with Aditya Birla Nuvo.
And the last on his list, 10 shares of Bata bought at 912 rupees. What should he do with this stock?
This is a bit of a momentum stock, and fortunately he's not losing too much money, though Bata had corrected in the interim. So I think he should use this opportunity to really exit the stock.
Alright, so exit the stock at this point. We've run out of time on this show. Thank you so much for writing in. Remember, there's an email ID at the bottom of your screen. If you have any questions for Sharmila or any of our other guests, feel free to write to us. Sharmila, thank you so much for spending time with us on this very difficult week in our markets. Remember, the show will stay with you and we'll hold your hand through this entire process. You'll find a copy of the show on our Facebook page and you can reach me on Twitter. Thanks for watching.